Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, August 31st, 2020. As we head into the last trading day of the month, I wanted to do a quick update on the broad markets, maybe touch on gold, and I'll start out here with VXX. This is an official trade. It did trigger an entry shortly after being posted on Friday. The buy trigger was any move above 26.89, and we briefly popped above that right here, right about there. I'm holding the crosshairs, the horizontal lines about the 2690. That's 2690. So that was it. This was popped it, got in, and moved back down. But I'm still very much like the trade. Wouldn't add it as an official trade if I didn't think the risk reward wasn't compelling. A lot of upside potential if this plays out. So far so good. Although it would certainly help to get over those recent reaction highs right there. Now, this is only going to play out, at least to these targets, T1, T2, and ultimately, and hopefully T3, maybe even more. It will only play out if we get some decent sell signals and a decent correction in the equity market. So know that if you're long the VIX or VXX, you are effectively making a short bet on the market. So if that's not your cup of tea, then as always, pass. But let's go over the broad markets. Let's look at the levels to watch. I'll start out with the futures only because that kind of helps me hone in a little bit better. You have more levels to watch with the 24/7, nearly 24/7 trading. And I'll get to the ETFs. I know a lot of you don't trade the futures. So here's the levels. Same, really nothing's changed. That's why this morning I've been up studying charts for the last few hours here, and there's probably a video I'm working on just covering a watch list I have of multiple sectors, indexes, global indexes, everything, but I'm trying to cull that down and get to the most important. Otherwise it would be an hour-long video to try to cover all the charts in that watch list. What I wanted to point out is, we pretty much picked up where we left off last week, so there was no reason for an update, but I do want to make mention this right here. This is the near-term uptrend line. I believe it was the same one I had last week on NQ. That needs a break. You can see we're wedging up right here with same story. We get these divergent highs, and so far they play out. Each one has led to a correction, but a relatively small correction. And it just goes to show how resilient the uptrend has been. So at this point in time, I don't see really any decent support on the NQs till all the way down here to this uptrend line that goes to the left of the chart here, and then down here price support about 11,274. So I do suspect, based on not just this chart, but also that VXX chart and everything else, we should have a decent pullback, at least 4, if not 5-6% or better when this one comes. So that's what we're waiting for. Waiting for a solid break and or 60-minute close. What does that mean? Well, not a little whipsaw move and a close back up above the line. Solid break means you're down here on a 60-minute candle. It might have 30-40 minutes left in the candle, but if you're all the way down here, likely you're going to reverse and cover. Otherwise, you want to see a solid close above, and that increases the odds. Now, you could certainly take an early short on a break of the trend line. And just know that the sooner you take a sell signal, like on any time frame, 60-minute chart, daily, you get a better entry if the breakdown plays out. But in any market, but particularly a strong uptrend, you also have a higher chance of it being a whipsaw signal. So there's no easy answer. There's lots of strategies. Either take the short early on, keep a relatively tight stop. Maybe you wait till it closes back above the trend line, or take a starter position, add to that position if and when it becomes pretty clear that the breakdown sticks. So as of now, we're above trend, no sell signals. And we're still well above the trend line on the daily chart. This is just a 60-minute chart trying to give us a little heads up on the next pullback here. And sooner or later, one of these seemingly minor pullbacks will ultimately morph into a much deeper double-digit correction. All right, let's look at ES and RTY, and then we'll look at the index ETFs. So that's NQ right here. This is the again the S&P 5, or I'm sorry, NASDAQ 100. I'm searching down below. Give me 1 second. There it is, ES. All right. ES, similar. We were looking at, we still are, hourly chart. This 2 months of trading history. I'm going to zoom in a little bit tighter because what really stands out to me is this orange uptrend line. So same story. We're testing that support right now on ES. Just a little more downside should do the trick. Again, watch, rinse, repeat. We have the most recent divergent high right here pending this sell signal. There are some minor, I can give you one little level where if you're an active trader on ES, we should see a reaction right around here, and also break of that level about 34.83 or so should open the door to the next support level down here about 34.47, and ultimately I'm favoring a move at least down to here 33.97 or so. That should constitute a drop of about, depending on where it starts out, if it started from here, that's about a 3% drop. And again, that would be a minimum pullback target. And it's roughly in line with the scope of the divergences, everything else here on the 60-minute chart. And then finally, for you small cap traders, you have RTY. These are the Russell 2000 small cap futures. Like QQQ or NDX, the Nasdaq 100 and S&P 500. We did get sell signals recently. Those didn't really pan out, at least not yet, for a correction. We pushed to marginal new highs, but yet on the Russell, we did break down. We're still below that breakdown point now. We came basically just recently this morning. It looks like came and back tested it. I'm drawing a straight line, and it's been resistance as well. That's why I had a line there since last week. That's 1589 right there, and we broke down. We started stair stepping lower, and then we started stair stepping higher, back to back test it. So that's it. Here's bottom line is near term bullish if and when this level breaks out. Near term bearish as long as we remain below it. Maybe I don't want to force a trend line there. Let's just say what we need to start seeing now are these reaction lows get taken out. If and as each one gets taken out, the bears get a check mark. They get a check mark here because the RTY was rejected on that back test of resistance, and that would be their next check mark. Check mark, check mark. Of course, a breakout would be a check mark for the bulls. It's that simple. All right, so as of now, again, the small caps have pretty much gone nowhere now since that sell signal down a little, right back to where they started. And if the large caps break down, which I still favor, we're going down at least to right here, 1494, and that should be a nice drop of about at least 4.5% or so from where we're at right now. Okay, index ETFs, for those of you that don't trade the futures, and they're worth watching as well since a lot of eyes are on the index ETFs. There's our VXX trade. QQQ, let's go down to a 60-minute time frame because, as I said, we're still well above trend on the daily. This is a trend line that I need to see taken out for a pretty decent sell signal on the daily chart. Looks like I have a symbol overlapping here. Let's get rid of that. And here's your trend line right here in orange. There's a near-term trend line. Similar to the Nasdaq 100 futures, we're just on or just above trend right there. So that's what we need to see go. There's your divergent high. There's your first target. This blue uptrend line comes all the way back here off the from around early April right there. Several reactions there. So if and when we get that sell signal soon, looking for something along these lines like that. And again, that probably be, well, that's the minimum target. Obviously, that's the first and minimum target, the trend line. Then 268.20, and then maybe down here to 254, favoring that move. But again, sell signal pending. SPY, little wedges, little stuff like this. You get these little wedges in an uptrend, divergent highs, and you get the corrections, little one there. And this one looking for a pullback to at least the 340 level. There's a little small uptrend line, near-term uptrend line. That would be a drop of about 3%. It's roughly in line with what I was looking at on the futures. And if and when that level goes, next target there is about 5.5%. And again, remember, when you look at the daily charts, there's a potential for more, but that we'd have to come down here, and you can see some support levels below this trend line. Let me extend that trend line, extend it right, color it up. And just to get there, so if the 60-minute charts play out, that would take us down actually right through that trend line and about to this the horizontal price support about 339. So there's a potential there. It could be a whipsaw, intraday break, close back above. But if we take out that trend line, then that has the potential to open the door for a deeper correction right there. And so that's how this stuff works. So I watch these 60-minute charts, and then sometimes, seemingly small breakdowns of minor trend lines have the potential to morph into more, especially if they, do some damage here on the more important daily charts. IWM. Small cap traders, this is what I'm looking at here on the daily, still above the primary uptrend line in blue. There's your 60-minute chart, and it looks just like the futures, really. There's your little last wedge. It was your sell signal breakdown, danced on this 156 support right there, and kind of moving back and forth. Still below the breakdown level, and holding up because the large caps are holding up. It's not to say that the small caps couldn't have fallen more, but usually if you see a breakdown in one, the small or mid caps, and particularly the large caps are driving the market, the small and mid caps are likely to only go down so far, just due to broad-based buying, money flows into the market and that kind of stuff. And a quick update on gold. Again, nothing new to report since last week. Last week we kissed this trend line. We had another successful defense of that trend line. The dollar also failed to break out. It tried to pop the downtrend line, and as I said, if the dollar was rejected, which it was, gold's going to have another leg up and hold that trend line. If and when the dollar breaks out and starts rallying, that's most likely when we'll see a breakdown of this trend line in gold. So that's it for now. We're still well above that recent high right there, and call it gold's in correction mode. It's more so at this point in time, there's been some downside in price, but it's more so a correction in time right now, kind of working its way sideways, maybe a little triangle setting up right there. But again, this trend line needs to go, and you can see the overhead levels that would be bullish if and when taken out. We'll get to the dollar here in a second. Let's look at silver. Silver, same story. You had this uptrend line here, which was hit and defended last week right there. We remain above that trend line. We took out this minor downtrend line. That's near-term bullish. And again, it all has to do with the US dollar. Let's look at that real quick. These are dollar futures, symbol DX. And let me refresh that, make sure that's all up to date. And that's it. So here's our primary downtrend line on the 60-minute chart. The dollar tried a few failed attempts to pop and hold above it, and as I said last week, if we go down, if we get rejected off the trend line, which we did, failed to break out, we'd come down and make a marginal new, if it only proves to be a marginal new low, which so far at this point in time it is. As I said, it would be a divergent low. It would be an extension of the bullish divergences that were in place last week, and that's what we have. We have a marginal new low. The positive divergences continue to build at this point in time. In fact, we have a nice divergence off that on the RSI now as well. And again, it has to prove to be marginal new low. Why? Because if it does this, if the dollar zigzags down a lot lower, you're going to take out these divergences. You're not going to have that anymore. And there is some support a little ways down on the daily chart of the dollar. But again, in the 60-minute chart here, if we can rally up soon, it's going to confirm this divergence and then break above the trend line. You want to see an impulsive break. You're still going to have resistance to contend with here, about that 93.20 level, and then that break above that level would open the door to about 93.95-ish. And again, if that goes, this would be my near-term preferred swing target right there. And that, should this scenario play out, as I still favor, that would lead to another leg down in gold and silver, and then maybe time to cover those shorts and get back long again. And the easiest money lately to be made, I think, has been, or at least for me, it's been in the ag commodities. They're just behaving well to the technicals. They don't have the gross price distortion that you have on the equity markets due to all the excessive Fed intervention, into the fixed income and equity markets. These are just playing out well. Broke out. The primary downtrend line I pointed out last week in soybeans. It continues to run. Building green candles, at resistance now. But again, this breakout right here, the downtrend line, was longer term bullish. So, anything is possible. I'm not saying this is going to, the absolute worst case, but in my opinion, right now, worst case, we come and back test that, get another leg up. And if we do more than back test that primary trend line, there's still that uptrend line there that I pointed out as objective buying ops over the last few weeks. So these are the things that continue to move. Soybeans, wheat, T2's hit again. We hit it back here. That's actually when T2 was first hit. T1 was hit here, and now we've cleared T2. So as I speak, this is an objective entry. I said it last week that was already hit once. I suspected we'd have maybe at most a minor reaction there and go on through there, but once we took it out, which we have today, that now we've taken out that resistance level. It opens the door for a move up to T3. Corn continues to rally, steady gains since the divergent low right here and the breakout of the downtrend line at that 1279 resistance target now. Coffee still looks good. Had a little correction after the first leg up. But it's rallying and about to take out, hasn't done it yet, but close to taking out that previous reaction high, which would open the door to that potential third target up there, and so forth, so on. NIB, cocoa, just trading very well again to the technicals. That was, plain and simple, buy it on the last checked along to pull back to this trend line. And these aren't exciting like Tesla and Salesforce.com and those, but these are commodities. So they're steady 80 earners right now, up 30% since that last objective long entry just a few weeks ago, and beautiful price action so far on the breakout of the bull flag right there, the bull flag continuation pattern, bullish pennant flag actually, flagpole, impulsive move so far. And still looking good up to at least 34.90. Let me see if there's anything else, and then I'll wrap this video up. I did get an alert today on SXC, that's Suncoke Energy, and one of the coal stocks I've highlighted recently, popping above the triangle pattern there. So it is a buy signal. We're still not seeing, very aggressive broad-based buying in the sector. We're not seeing that yet, but a lot of these stocks we're seeing one by one breakouts. So far, SCX breaking out today, NRP moving up. Let's see, I got a couple others on the radar here. BTU poised, it's pushing against the trend line right now in that 252 level. So any more upside could trigger a breakout, or should trigger a breakout on that one. And that's it. Okay, let's wrap it up here. Let's keep this one short, get it out to you guys. Those are some of the things I'm watching today. And let's see if we get those sell signals in the equity markets. If so, that VXX trade. And again, VXX is almost like a leveraged short on the market if you're going long VXX. And don't go crazy with your position size. There's inherent risk in ETNs, especially in volatile instruments like the VIX. We've seen some of those already go to the wayside this year. Again, it's trading 101. Never put all your eggs in one basket, number one, but in very aggressive volatile instruments, temper that down. I think I used about a 0.6 or 0.65 beta adjusted position size on that trade, which means like about 2/3 of what you might normally trade on SPY or something like that. All right, I'm going to wrap it up here, get this out to you guys, and anything else stands out, I'll get it out to you with some static charts or another video. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.